Hi, and good evening to everyone, and good afternoon or good morning in case you're somewhere else. We are here to dissect the Union Budget 2022. This is an interesting budget exercise, which is the second one in the middle of a pandemic, and the pandemic is still on. The first one was in February of 2020, and the pandemic started after that. The second one was in the thick of it in 2020, then 2021, and now we are in 2022, second year of pandemic. The reason I'm saying this is one did not quite feel that there was a pandemic all around. If you heard the budget speech today, there were some references to it, but not the kind of reference that maybe someone like me would have liked to see, particularly if I was looking for contingency plans and a thought process which looked at merging the challenges of health and economics, or the economy as a whole. So that is a very, very broad sense, but there were a lot of interesting and maybe good things, and some may be good. But as I've felt right through this speech, a lot of the budget is about what was unsaid rather than what was said. So, but maybe that's a new way of presenting a budget and a new strategy. So, what we're going to do this evening is we're going to talk to three people from slightly different perspectives and get a sense on what they see from a capital market and an investments point of view, from a finance and personal finance point of view, and finally, and most importantly, perhaps tax, considering that there were some very interesting tax announcements, including the one on crypto, on which I've again picked up some interesting insights in my own conversations with tax experts this evening. But we'll come to that later as this evening progresses, and I progress it will. So let me begin by first welcoming and introducing Saurabh Mukherjea of Marcellus. Saurabh Mukherjea is the founder and CIO of Marcellus Investment Managers, who manages large portfolio schemes, and also a very, very astute market investor and observer and author, most importantly. On that note, what I'm going to do is ask Saurabh a very broad question, which is, what are the hits and misses that you saw or took away or did not take away from the Union Budget 2022? And we'll use that as a sort of start point to get into a conversation. So it's over to you, Saurabh.
Thanks, Govind. Thanks, and it's a privilege being here. I thought this was Finance Minister Sitharaman's most controlled performance to date. She looked to be on top of her game. It was not just that the speech was brief, which it was, but she was very adept at manipulating various fiscal levers. I think three areas where I'll give her particular credit. First, I think there was a lot of apprehension that given the heavy political calendar, the election calendar over the next couple of years, that there will be anti-rich taxes, hikes in CGT, surcharges, and so on. Thankfully, there was none of that. Instead, what you got was a very enlightened announcement that on startups, you'll get one more extra year of tax break, and the long-term capital gains tax surcharge on startups is capped at 15%. Now, this is quite a big deal. This is a distinct shift, and if this continues for another budget, I think this is a distinct shift in the way the Indian polity views startups, views rich people, and views taxation of the rich. If you read the history of the Silicon Valley, it's in the late 70s when the first time America cut CGT on startups, right? And a big part of Silicon Valley surge and this startup culture in America took off after capital gains tax was progressively reduced in startups. So quite an interesting point of view there. They're going into a heavy election season, no new anti-rich taxes. I think the second area where the FM was aggressive in a way that I've seldom seen other Indian governments be was people like me expected, say, a capex increase of 19-20%, right? Given the fiscal circumstances, I thought 19-20% would be a good number. Instead, we got 35% increase in capex. I honestly don't know whether that can be delivered upon or not, but as an announcement, it's very Keynesian. And again, it marks a departure from this constant fretting about budget deficits and so on. It was almost in your face saying, we will spend the money on 25,000 kilometers on roads, which again sounds very aggressive, but it was a very pronounced point of view that this is the way it will be. We will spend on hard assets. By the way, equally relevant to note, the RevX pullback, the subsidy pullback, which is pretty sharp. She didn't announce it explicitly, but if you look at the numbers, the subsidy pullback is pretty sharp. Again, quite remarkable going into 2 years of heavy elections, a massive subsidy pullback. I think something like 40% subsidy pullback. I think the third area was was crypto. Both in the speech and then subsequently when she gave TV interviews, she was very clear in saying that only one institution issues currency in India, which is the RBI. Whatever else you're buying is not currency. You can delude yourself it is, but it isn't. And secondly, basically, it's like a casino asset. We will tax it CGT at 30%. And more devastatingly, I think, the 1% TDS. Every time you buy and sell crypto, 1% TDS, which should at least make those people who are sort of punting on crypto like they punt on stocks pause. So bold move, right? No other country has done this. So usually we are a country where our economists get trained in Western universities, and we look askance at the West for guidance. This is an area where we seem to have seem to have taken the lead, not just the 30% CGT, even more interestingly, the 1% TDS, because that will then make it very difficult. Unless you want to be a tax evader, you'll have to report your transactions to the government of India. And once you report your transactions to the government of India, you might have to answer some questions as to where did you get the money which you were punting on crypto. So very intriguing moves there. In terms of misses, it was a little perplexing. I can understand some of the tactical aspects, but I'm still a little perplexed as to why so little visibility on non-tax revenues. Both the numbers are underwhelming, no clarity really on when these assets will be sold, when the LIC IPO will be expedited. Now, where I can understand is as an investor, right? I don't like showing my hand, and perhaps the FM didn't want to show her hand on privatization and IPOs, but that seemed a little underwhelming, given that last year she'd been brave enough to use the P word, privatization. Like it's almost like a swear word in Indian politics. I thought we would see a step forward, especially since the Air India privatization had been expedited, but perplexingly quiet, I thought the FM was. And right at the end, there were those import duties on electronics and capital goods, and that had a feeling of the 80s, right? And the numbers are small. I think it's 7.5% on imported electronics and so on, but it sort of brought back memories of Indians coming from Singapore and Japan with Sony TVs. I don't think we want to go back there, but by and large, I think this was her most assured performance. Solid show, given that it's a COVID budget to go with.
Right. So I think we are approaching this from the point that yes, we expected some real bad news, including, let's say, taxes going up. There's an interesting dichotomy or play here. The one expectation is that taxes would come down, personal income taxes. The other is that it could go up. And what the government is saying is that be happy that it has not gone up, therefore it's a big plus. So, but on the other hand, in the case of something like crypto, obviously, as you said, they've imposed a tax. Now, if we were to take a step back and let's look at the unsaid part of the budget. So one thing which is unsaid is clearly the privatization part. There is no clear, there is a number, but there is no clear target. There is nothing that you can fix responsibility upon and therefore chase. So what is that? How does that appear from a market's perspective?
I'm not so sure the market was going to get, even if she had given visibility, I'm not sure anybody in the market would have set any great store by it, right? Because given what's happened in the last 20, 25 years on this subject, I don't think any of us would have set any great store by it. It's just that it would have given us some sense that the government has got an explicit roadmap. I suppose what we are left to decipher is the smoke signals, that the government is quite happy about their India privatization, and rightfully so. I don't think it's an accident that their India privatization was announced basically in the budget week. And there was explicit mention that the LIC IPO will be expedited. I think beyond that, we'll have to see.
Right.
We'll have to see what comes through. My reckoning is there will be heavy duty LIC sales. I think between now and the election, I reckon the government will do 2 tranches of LIC. Remember, once you go public, you have to go all the way down to 75% free float within 3 years of going public. And that will be broadly between now and the election. So I think the government will have 2 bites of the LIC cherry, and perhaps BPCL, Concor, at least one of those big assets will also fructify. But I presume there are good reasons for the government to have held its cards close to their chest on this subject.
Right. So I'm going to come to the economic or the macroeconomic environment which affects the fortunes of companies who you invest in or we all invest in. Now, but before I do that, what's your sense? I mean, the fact that they did not, let's say, announce something populistic ahead of the elections is a good thing. But even if they had announced something with clearly big elections, provincial legislative elections coming up, would that have upset the markets in any way?
No, I think whether the markets will be upset or not, I'm not so sure. I think one of the most interesting things I took away from the budget was I think this is the first time the government is basically saying we don't think these things have any bearing on elections anyway. And I found that fascinating, right? If implicitly we were told, right, and I don't think it'd be any more direct. Going into UP elections, you're cutting subsidies by 40%.
Narega.
Yeah, exactly, right. And you're doing it, I mean, it's not even that subtle. So I think that was actually, at one level I was quite delighted, because I used to feel, I felt for a long time there is this bizarre sort of connect between politics and economics, which is actually false. I don't think anybody on the streets of Mumbai or Delhi is going to protest if there is if BPCL or Concor gets privatized, or even IDBI.
Right.
It's privatized. So for once, there seems to be the realization was made almost explicit that this is about economics. The budget is about economics, accounting, rather than winning elections. Elections is a different subject. That's almost like a different department of the
Right, right.
government.
And that would be a great conversation, but we don't have time for that. As to what indeed is the government so confident of, which they feel will deliver them the election. So now let me pose a couple of questions around consumption and consumption, purchasing power, and inflation. These are the three things that are hanging over this economy and country, and of course on the many stocks that are doing quite well in the market or have been doing quite well. And yet the budget did not directly touch them either ways, either bare mentions or no reference, or very little done to actually, let's say, increase consumption, unless you're saying that yes, I'm going to invest so much in capex that will trickle down to greater consumption and so on. So anyway, but from your point of view, how are you looking at these macro factors, whether they were mentioned in the budget or not, and how they're going to play out in the next few months?
Let's take it step by step. I think firstly, because of the pounding of the second wave, right, it's relatively clear that there has been a hammering of low-income workers, their buying power, and also small businesses. I think the second wave was particularly brutal, and you can see that in whichever company you get. Mention any FMCG company, they're reporting negative sales growth in rural India. You can look at two-wheeler sales, which are down on their knees. Remember, two-wheelers are not impacted by the semiconductor issue, and NREG uptake is elevated, right? So there's clearly a problem there. Now the question is, will this be alleviated? Will this problem be alleviated by throwing money at the subject? And I believe that's not the case. I don't think throwing money at the rural poor will solve the problem. I think the big challenge here is there has been heavy migration out of the cities back to rural India. First wave and second wave drove that. That's resulting in labor shortages in the cities. We are seeing in the companies that we invest in, we are seeing widespread wage inflation in the factories. There is labor shortage even for, say, truck drivers, delivery boys. And therefore, the challenge is you have to bring people back from the villages. The migrants who have returned have to be brought back. Is there any government scheme that will do that? I can't think of one. And therefore, in the absence of that, it isn't obvious to me that just by ramping up RevX, ramping up subsidies, we're going to solve this issue of distress in the villages, in the low income earning segments. So in that regard, I'm glad that the knee-jerk reaction, which would have been throw money at the problem, hasn't taken place, because Govind, had that been done, that would have almost guaranteed stimulated CPI inflation, because we would have thrown money at the poor. They would have tried to use that to buy goods and foodstuffs. That would have ramped up inflation. So ironically, this budget, I don't see it as being inflationary. Neither do I think the budget itself will alleviate the distress of the poor. But I think that isn't too bad a thing, because we need the normalization in the post-COVID world, bring the migrants back to the cities, because otherwise the sorts of wage inflation we are seeing in factories is going to render India uncompetitive over a 2, 3, 4 year period. Govind, you're on mute, Govind.
Sorry, so how does that play out then, Saurabh?
So that's a big question, right? So I think we've reached a stage as a country where we need to give some sort of assurance to the poor, whether it's a health insurance construct, a social security
Right.
construct, because given, I think the first wave was bad enough. We all remember the stories. The second wave was lethal. And I think it's really damaged the confidence of people, migrants who had come to cities. We simply haven't seen that return to the city. So how do we bring workers from the countryside to our cities to staff our factories? I don't have an easy answer. It looks like there'll have to be a creation of a social security construct that people can believe in. But hey, it's easy for us to say these things at 9 o'clock on a weekday evening. It's difficult to put a social security construct. The record of the Indian state over the last 30 years in delivering last mile services isn't the greatest, and therefore I think it's a much broader question than the budget. How do you help people in the countryside get up on their feet after the COVID pounding?
Right. Okay. Let me pick up some questions very quickly because I know we are short on time. Shankar Narayan asks, would the introduction of digital currency, would there be an impact on the performance of brick and mortar banks?
Don't think so. I think the world over, brick and mortar banks have stood resolute. We haven't yet met too many people. We haven't met anywhere in the world fintech lenders who lend large sums of money because it's difficult to collect money. If you don't have feet on street, you're not going to collect money, whether you're in the United States of America or in India or in Argentina. And neither have we met too many depositors across the world who deposit their life savings in fintech banks. So fintech is a great idea. But from a lending perspective, from a banking perspective, from a lending perspective, it hasn't gone very far. Where fintech has worked is in the context of things like brokerage, to a lesser extent, asset management. But in the both sides of the balance sheet, from a lender's perspective, fintech is a cool idea, but practically not really particularly relevant at the ground level.
Okay. Suresh Katara asked, is it known which are the chemicals where import duty was reduced? Any losers or beneficiaries that you can think of?
We haven't been able to get to the bottom of that. We've got several specialty chemical companies in our portfolios. I think we'll give them a ring over the course of the week or so.
Yeah, these things do take time to unpack. And while we wait for more questions, Saurabh, you talked about the additional 7.5% duty, which is also on select capital goods. What's your sense on, after almost 30 years, we've started raising tariffs, and we continue to raise tariffs. Not so many this time, but we've continued. So the trend clearly is towards increased protection of at some level or the other. How do you look at that, either philosophically or otherwise?
How I look at it, I don't think matters. Who am I? How does it matter how I look at it? What's relatively clear is I think we are increasingly following the more interventionist model that the East Asian countries have followed, where the government, MITI in Japan most memorably, the government will say this incentive for that sector, chosen champions in this sector, this micro intervention to juice up the fortunes of this sector. So we're increasingly gravitating towards an East Asian style model where the government is trying to fine tune specific aspects of the economy. PLI is a step in that direction, as are these very calibrated import duties. Where exactly that does that take us? I don't think I have a clear view on that. There's an enormous amount of literature on whether the East Asian model is the right model for India or not. I don't think tonight is the right time for me to sort of delve into that.
Okay. Uh, there's another question which goes back to that digital currency. Will the Reserve Bank's digital currency impact payment banks and companies like Paytm?
I don't think that's the plan. I think we'll have to wait for the digital currency to emerge. If it emerges in the next 12 months, there'll have to be a blockchain register, I presume. If there is a blockchain register around that, then I'm not so sure that's something we can use to. Can we use that to buy milk and bread at the neighborhood store? I think that's quite some way away. The challenges for the wallets come from a different source altogether. I think UPI. If I was you, if anybody out there is interested in wallets, just look at UPI and look at the existential challenge it poses for many wallets out there.
Right. Okay. I can see Deepak. Sorry. I can see Deepak Shenoy and Girish Vanvari. I mean, guys, do sort of click on your videos and join in because I think we could get this going as a conversation. Here's another question, and This is from Prashant. He says, with inflation on a rising trajectory for the past few months, would the government be prompt in making appropriate changes to small savings interest rates or hold it back, considering the huge capex funding requirement?
It's a subject that I think best left to the government. If you don't have a general election round the corner, why would you hike? Why would you hike savings rates? If people are depositing money with the post office and so on, I can't see why the government would suddenly hike savings rates unless they had some need to please the public. As I said, what was intriguing about the budget was almost an explicit point of view that elections and the budget are not really now on the are not really part of the same conversation.
Right. Okay. Here's another question. I think we've lost. Have we lost? No, Deepak is around. Deepak, let me get both you and Girish. Quick, when I heard Saurabh describe the budget speech today, I was reminded of a batsman, maybe Rahul Dravid, because he talked about controlled performance, steady batting right till the end. What was your takeaway? I mean, you did not use the same analogy, of course. Deepak and Girish, before we dive into the more specific questions.
Should I go first?
Yeah, go ahead.
Cool. Thanks, Govind. I think, the budget's been, it didn't have much negative. And, honestly, this is the year for a negative budget, because you can't do much of a negative budget next year. Politically, it's the last real budget. So if they had to do really bad things, they would have done it now. I expected an increase in capital gains tax. That didn't happen, thank goodness. I expected some kind of increase in, say, an 80C kind of savings kind of thing. That didn't happen. I expected them to do more for electric vehicles. That also didn't happen so much. What I did not expect was what was not in the budget speech, which was they have reduced duties to a tremendous extent across the board. I think this is mainly because of WTO objections that may come around and their recent losses in that thing. But and also two small other things, I can discuss those later, but it's a change in focus from a farmer-based budget, which is what they do every time, to a more capex-oriented budget, which is finally good, thinking longer term. I think the numbers that are thrown out to us right now are completely hogwash. And I won't mince my words with this, because they did that the last time. The last time I said the same thing. There is no way you're going to keep, you're going to get such less revenue and keep expenditure so low. So it's exactly what happened. They made 15% or 20% more expenditure and 20% more revenue as well. So I think all these numbers today that we're getting from the budget speech itself is like way too low compared to what we'll actually get. But yeah, it's a little disappointing in terms of no innovative means of financing.
So Deepak, who's the batsman, if any, or bowler that comes to mind if you were to describe this?
Well, I'm thinking of a budget that wants to underpromise and overdeliver. Okay, so I don't know of a sportsman like that, but they either always. You choose the sportsman. I'm terrible at this.
Okay. Anyway, you've set the parameters. You've set the parameters. I'm going to come back to Saurabh before you go. I know you have to for your sum up. Girish, welcome, and very quickly your one or two line takeaways, and maybe a batsman or a bowler that you think would best describe Nirmala Sitharaman today.
I think from a tax standpoint, very, very stable budget. No surprises, no new taxes, no googlies actually. It's absolutely stable. So it just shows that the policies are very stable. And a lot of rationalization on the various contradictions in the tax laws, where there are case laws on two fronts opposite one another, a lot of logical rationalizations. So from a tax point, very, very stable budget, no surprises at all. Yes, there are misses in it, which we'll come across when we go through the thing, but overall very happy as a tax professional.
Okay. No, any batsmen, bowlers?
I think I would say it's Rahul Dravid, as stable as it is.
He's I think he seems to be a gold standard for when it comes to stability. Okay, Saurabh, as you have to go, and I'm going to introduce both Deepak and Girish in a slightly more elaborate manner in a moment. But Saurabh, your sort of top headline hits and misses, and what would you have wanted to see for sure, but you didn't? And conversely, what is the one thing that you saw and that you feel is going to be a game changer, or any
The only thing I thought there'll be clarity on is non-tax revenues, which is disinvestment and privatization. As I said, very little clarity on that. Perhaps at one level, no bad thing, given that no point the government making yet another promise, which might or might not fructify. On the positives, a lack of anti-rich taxes, a positive view on startups. Very refreshing to see LTCGT on startups being restrained. A positive announcement on the capex side. Whether they can deliver that sort of capex surge again remains to be seen, but good to see that sort of announcement. RevX pullback alongside that, and lastly the pretty punchy announcements on crypto. It does take some degree of clarity of thought to go after crypto in the way they did, and I think that deserves credit. Overall, as I said, her most assured budget performance, I think, in the 4 years that she's been at the helm of the finance ministry.
And between now and the next budget, that's 2023, how do you see the markets moving to the extent that they could be or might be driven by all of which we spoke about?
I think the budget, to be honest, becomes quite irrelevant from a market perspective. I think this is a legacy of our socialist era that we spend all this sort of time discussing it. We are largely a free market economy. These sorts of announcements actually don't matter much in the broader context of the economy. The main thing driving the economy over the next couple of years will be a growth recovery. I don't think the budget has impeded that. The growth recovery shall continue due to a mixture of global forces and local forces and cyclical factors in the wake of COVID. That should be the main theme. Whoever's watching, from your investment perspective, please don't go away and try to sort of game the budget through some very cute strategy that doesn't take you very far in life.
And you see liquidity and all of that staying put, or broadly?
I think foreign investment will come, both the FPI piece and the FDI piece. The FDI piece is coming quite nicely. The FPI piece should be there once again. The last 3 or 4 weeks, I think, is an aberration. Given China's own goals, every almost weekly basis, China scores own goals. That sets India up quite nicely for 3 or 4 years of solid FPI flows.
Wonderful. On that note, thank you so much, Saurabh, and it was a pleasure speaking to you. And thank you also for staying on for a little longer than you would have. Let me bring in Deepak and Girish formally. Deepak, as I said, is CEO and founder at Capitalmind. No, I did not say that. He's invested in the stock markets for over 20 years, and he's a SEBI-registered research analyst with a degree from NIT Surathkal. Girish Vanvari has been around for 27 years in consulting, and he used to earlier be a national tax leader at KPMG India, and now runs his own firm called Transaction Square. So thank you both again for joining me. Let me start off with you, Deepak, and you've already given us the overview. I think you've indicated what your concerns were. Can we go a little further and walk us through what top of mind in terms of hits and misses?
Hi. Yeah. So, overall, we've had a bunch of hits. I think crypto tax was good. It helps me, so I'm quite happy because, you as a fund manager, you get compared to how are you doing with respect to crypto kind of thing. So little Schadenfreude there, but it's not necessarily just that. It's also that it provides some level of clarity in how the government's thinking of whether it wants to ban it or not. Now, it effectively means if you do 100 round-trip transactions, they keep all your money because you're going to pay 100% 1% per transaction effectively in TDS. And that's kind of going to, not to keep all your money. Of course, you're going to you can claim it back as tax, but it's going to be paid. So it's going to reduce the fluctuations and perhaps remove some of the extreme leverage concepts of this part of the business out of India. I also think from a perspective of tax cleanups, they've removed the bonus stripping loophole. Again, not very great for us because as for asset managers, there was one loophole that you could use, but I think it provides for a cleaner tax experience overall. They've rationalized long-term capital gains tax, which is also, I think, a good thing. In terms of expenditure, they've changed the nature of expenditure. They haven't reduced what they'll spend on, but they've changed what they'll spend on. They're spending less, much less, 30% lesser on food subsidies in the next year, and spending considerably more on roads. So that's a good thing. They're spending more on the fertilizer subsidy, which is a little bothersome, but they've at the same time reduced the import duties of fertilizers. So they've given some relief there. They reduced import cost of a lot of things, including textiles across the board. I think yarn producers have been complaining that yarn costs in India have gone up and the import duties were quite high. So apart, they've kind of rationalized that downwards as well. I think if I were to sum this up, I think the aim of this budget is in some way to reduce inflation, and perhaps, like Saurabh said, if they focus a little bit less on the amount of subsidies they're giving food, which was crossing 2 lakh, it's crossed 2,80,000 crores last year. Now the budget is only 2 lakh crores. I think moving that to roads is a much better thing even for the villages. And I hope, I know it's going to be a non-event because almost all policy announcements of any major impact no longer happen in the budget. They actually cut corporate taxes in a non-budget call. So don't think budget as an event is as meaningful anymore.
Yeah, which is good, I guess, and what most of us have been clamoring for in any case. Girish, if you were to now deep dive, what would you first pick on?
I would actually first pick on the changes which we don't talk about. And if you look at the corporates, there is a big thing saying that there is no change in corporate tax rates, everything is the same. Yes, there are extensions of tax holidays. This 15% new manufacturing tax holiday has got extended by a year. Startup has got extended by a year. But there are two, three things which are actually takeaways from the corporates. The first thing is foreign dividends will now be taxable. They had a concessional rate of 15%. Now onwards, they will have to pay tax at the regular rate of dividends. Of course, there's a ATM concession. So anybody wanting to get money from the overseas subsidiaries should get it before March end. Otherwise, they will be having a higher tax rate. And there are two other big changes which are there, which impact companies. There was a big debate that whether cess and surcharge was deductible. Many people had taken a view that cess and surcharge are deductible expenditure, and they had revised their returns based on case laws. There's a clarification which goes back to 2005-6, which says that this is not deductible. So this is going to trigger a lot of demand for people who went ahead and took those aggressive positions. And the third and the most important thing is that, if something is not lawful and if you paid that person that amount, then that expenditure is also not deductible. For example, I'll give you an example. Take an example of a doctor. A doctor cannot take a holiday from a pharma company. A doctor cannot, take any benefit from a diagnostic company. So you see doctors going overseas for travels and seminars and all on the cost of the pharma company. That is the lawful expenditure by the company, unlawful expenditure. So that is going to be disallowed. So in a lot of industries where they were claiming these kind of expenses, the disallowances would happen. So there are things in the budget which may alter tax positions of some people, which I think we don't talk about, but that's there in the budget. And this bonus stripping also is a very important thing. It's not just plain bonus stripping. Bonus stripping, look at it from a perspective of startups. They do bonuses, and some people do secondaries in startups just before the IPO. They do bonuses to make the IPOs happen. Then for 9 months, you can't sell it. Otherwise, you will have a problem from the bonus stripping perspective. So it has cascading effects, not just simple bonus stripping for taxmen.
So your focus is mostly direct tax, Girish, if I
Or
understand.
both. And GST, I think GST also is GST. There are not too many things to be spoken about because GST is outside the budget. They just spoke celebratory that GST rates, collections have been high, and customs there's a taper downwards as you see that they want to move towards a rate of 7.5 without too many concessions.
Right. Okay. So let me pick up a couple of questions to keep the conversation going. Suketu Lalwani asks, and Girish, this you could pick up. Did the government miss an opportunity, I assume, to iron out taxation issues to enable access to global bond indices? We could have got substantial money from the same.
Answer is yes. There has been no extension of the interest deductibility, and there is a cap on the interest also in that period. Yes, we have not got any changes on that front. But I was not expecting personally, because there is so much liquidity in the system at this point of time that for them to give this concession perennially for the last 10 years they've been giving it. How much would they further give it? I was not very sure as a tax professional.
Right. Deepak, I'm just coming to you in a moment. Girish, the long-term capital gains, I mean, the announcement seems pretty simple that the surcharge has been capped at 15% on financial assets. If you could tell us what are the conditions around in which this is applicable or not applicable, what should we be careful about in interpreting anything, if so?
Yeah, it's a very important amendment. If you were selling a house, if you were selling shares of unlisted companies, hold on till April. If you sold it now, you will pay tax at a rate of 28.5%. Whereas if you sold it post April, then the rate goes down to 23.92%. So any long-term capital gains tax on a capital asset, which is other than a listed security, today the rate is 20 plus surcharge, effectively can go up to 28.5, and it should be changed to 20 plus surcharge plus cess and other stuff, which makes it 23.92. So I see postponement of deal closures to next year.
So,
Because
but this does not include listed stocks, you said.
listed stock anyway is 12%. So that
Not
anyway,
one year.
yeah. So that anyway is the concessional rate. So that's
Right.
not a problem.
And what's the thinking behind this?
The thinking behind this, there was a big representation with the startup community made. So the government had met the startup community. They told them that they have to pay 20.5%. It's not fair for them to pay a surcharge of 42%, whereas for listed stock, the surcharge was capped at 2%, 10 on to 23% effectively. So based on that, there was a year which the finance ministry had, and I'm glad they did it. Because what is happening in startups is at the second or third round of funding, Govind, people are encashing some things for themselves. And then the tax burden is 28.5 is huge money. So it's a big
Understood.
benefit to them.
Understood. Deepak, can I get an overview from you on what you've taken away in a more fine printish way? And then maybe we can pick up a couple of questions.
Yeah, sure. I mean, I think I've discussed this, but let me go through if I went through the budget documents in terms of spend, I have been complaining for the longest time that we spend too much money buying excess food from farmers. And it's not a very popular view, as you can imagine. So I'm kind of happy that the amount of food subsidy we're doing next year is going to be lesser. I expect food inflation to be a problem. So in the sense, because of the lower prices of 2021, we're going to have some kind of an issue with food prices at some point. So having too little, having a relatively controlled amount in food subsidy there would be is a good thing. We are, however, we've upped the spend on education and health very microscopically, but the last 2 years have been
0.82% or something.
Yeah. I mean, really, we've
denied. It's very low.
Horrible, and we've denied our kids in education, and this is India's kids, right? So it's not just rich people; it's also everybody. 2 years, a lot of them have lost 2 years, and especially the economically challenged have literally nothing. They've had 2 years of nothingness. That's going to hurt them in the years going forward. So we should have been spending more, even if it meant in some way making it up in some different ways. They're talking about green bonds, but I think really, if you ask me, I would accept lower interest rate if the government were to spend specifically on upping the educational standards and getting their public schools in better order. We pay an education cess already. It's 4%. It's not, it's on everything. So I think I'd have spent more on that. Bringing the bonds, we spend 9 lakh crores in interest. This is now our largest expense by far, I think double our next largest expense of defense. 9 lakh crores out of a spend of nearly 40 lakh crores. That's nearly 25% of all money spent, just paying interest on the past loans. And the interest rates are high because, India doesn't want to. We have some law that says FIIs should pay tax on capital gains and on coupons. Everybody else charges in the world, I think, other than India and Argentina. I think a couple of very few countries charge capital gains to foreigners that invest in our securities. We're one of them, and we because of that may not allow us to be included in some of these global bond indices. And if that were the case, we would actually have much lower interest costs going forward because India is a large enough country for being able to borrow. So, there is going to be interest at some level if this was dollar denominated, but I think these are misses. Overall, I think, the budgets, let's just say, I'm happy it's over because you keep thinking that they'll do something crazy. Are they going to do something crazy? And they're not doing something crazy, which is a good thing. So I'm happy for the lack of surprises, if you may. Of course, I'm also happy that we're getting to a point where some of these import and import subsidies are also evening out. We had import duties that were quite high, so supernormal profits were being seen in some companies in the market as well. Primarily because they could raise prices to a point where you didn't have foreign competition. We've also, by the way, cut import duties of wheat and maize and corn and a bunch of stuff. So I think that also is going to make a little bit of a difference to inflation if it were to pop up in food later part of this year. I'll stop there. I can keep going, but
No, that's fine. So, budgets once upon a time were seen to be as, course determining events for the market. That things would change on Feb 1st or when whichever part of the year it was. The budget happened and things would change. The course would change, the direction would change, money flows would, whatever. Saurabh seems to feel that that's now no longer the case. Is this budget also now reinforcing that belief for you? And if not, why? And if so, why?
So basically, unless there was a major change in some element that could have caused either corporate profits to go up a lot or corporate profits to go down a lot, the stock market doesn't care so much. The stock market is like literally the top 10% of companies, maybe top 100 companies in India pretty much make the stock market. Okay, so if you think about it from a stock market perspective, all they care about is, the richest companies in India, have you helped them in some way or not? Otherwise, they're like, whatever. I mean, if you help farmers, it doesn't really trickle down unless you help the fertilizer companies and the cement companies and the steel companies and so on. Right now, there's not so much. There's a bit of help and there's a bit of negativity. And so it's kind of a balancing. But in the lack of those surprises, this is less business as usual. I think India is on a different path altogether, a very interesting path. So I think big time disruptions will happen. Our companies which are currently cement, coal, aluminium, steel, in the top 50 or top 100 will get replaced eventually by the giant tech companies, whether they're Indian or not, and companies that will perhaps have a different way to scale. This budget does nothing to change that. In fact, it encourages it by simply retaining the same playing field as it was earlier. I would say, I'm welcoming innovation here. There's nothing specific for innovation, which is a good thing. The government, whenever it tries to foster something, it does a really bad job of it. Almost like, you leave us alone and we'll get our act together. That's what India is. We succeed despite the government, not because of it. So I think, in that context, good budget.
Right. It sounds suspiciously like a Bangalore view, but an important view. Okay, so here's a question which almost follows from what you just said, Deepak. Jay Shah asked, as a fresh investor who starts investing tomorrow, how does he go about constructing the folio if capex cycle, housing cycle, debt cycle, leveraging plays out? Should he would have more focus on real estate, ancillaries, industrials, energy, power. However, given how Asian Paints, Pidilite are growing, but since they are valued at 70 to 80 P, but earnings are not catching up, plus interest rates rising, fairly valued companies vis-a-vis expensive valuations. How does one construct the portfolio, which he comes back to that, and how to play the China plus one theme, which is a separate question.
Actually, when you play themes, I think you have to be knee deep in the knowledge of those themes in the first place. Some of these themes will last, some of them won't. China isn't a pushover, and if it were to see that India was gaining any layer of foothold on it that were detrimental to its success, they would act, and they're very, very big when they act. In fact, they're so big that, the fact is India was exporting steel to China 3 months ago, and China makes more steel, 10x more steel than India. I mean, has the capacity to make 10x more steel than India. So there is this China plus one is almost like China plus one when China is not noticing, which is a good theme. I mean, it's like a lot of people don't notice. It's fine. But I think if you take each of these themes, you should play them by your understanding of their nature. If you understand the chemicals, pharma space, they're very good companies over there that will probably last the test of time. The problem is to figure out which, and to figure out whether you can last through any intermediate down cycles. Even though the stocks may correct 40-50%, it's fine. Longer term, they'll still do well. But not many people have that ability to stay. So if you're betting on it theme by theme, be sure to understand what affects it. I think the real estate cycle, it makes sense to be diversified right now across themes, and to avoid the extremely expensive sectors like you mentioned, because the upside doesn't seem to be quite as much, but the downside seems to be higher. So the risk reward isn't quite there. But if I were to choose, I'd say put a little bit in the kind of sectors that you really understand. If you don't, and if you're just playing this on real estate will do well because my friend told me it'll do well kind of theme, then I would just say go across the broad indexes. Even India plus the US. Right now, you can't invest in the US so easily, but assuming that at one day they change those limits, just create a more broad-based portfolio, and expect very little from your fixed deposits and your debt funds to make up for any equity losses. That's what I would say.
Okay, so if you're going to start tomorrow, think of India and the US, is what you're saying. And you can, I mean, invest in the US directly. That's pretty simple right now. And the limit per year is $250,000. Not many of us, speaking for myself, of course, can hit that. Girish, to you, how competitive are we from a tax point of view? I mean, two things. I mean, one is what we face individually as companies, as well as from a tax administration point of view. And has this budget done anything in that regard?
So from a rate standpoint, we are very competitive, whether it's individual or whether it's corporate. So if you look at UK, you look at US, our rates are comparable to any other mature country in the world. There's no problem. Where we have a problem is the execution of our initiative. So like a faceless assessment, till it becomes really stable, it takes time and harassment happens. Or even the dispute resolution or the litigations and the various things. There is one indirect VDIS scheme in the budget. And I would say it's a VDIS scheme because if you've forgotten to put something or you've taken an aggressive position, you can revise that position 2 years after your assessment year. And you have a penalty of 25% for 1 year and 50% for the second year. Now, that's a VDIS actually, because you have an opportunity to get away without penalty.
Is there any limit on the scale of, or any company, can a company also do that?
Anybody can do that. Now, the only thing there is you can't be in a search case. You don't need to have a reassessment open done. But if you have some worms, you can actually clean it up in this whole thing. Our execution is a problem because the initiatives are good, but the interpretation of that creates problems. That's where we're not globally competitive.
Okay. And if you were to now look at it in the context of people who are, this evening's audience is largely about investing, looking for opportunities and so on. So would you want to address it from that point of view?
I would think the rumors, I'll tell you, I used to get calls 2-3 weeks into the budget. Will the capital gains tax go up? Will there be inheritance tax? All the wealth managers were busy running around making trusts. So the fears on bad news has gone away, and markets like certainty. So that uncertainty part of the budget spooking the market has gone away. Now, clearly, all the eyes will now be on as Deepak said, US Fed, US taper, interest rate hike, 4-5, how many will India do? Till that stabilizes, I think, again, that's another conversation we'll have. And the elections in these states. So I think the budget tax fears now are behind us. We will not speak about it very often in the next few days.
Right, but as Deepak reminded us, the corporate tax reduction happened off budget.
Yeah, but
good news, of course, but bad news could come similarly, couldn't it?
Unlikely, because there's a LIC IPO happening. There's a Air India celebration, right, which is on the card, and by and large, look at the GST collection. It is awesome. I mean, with the Omicron now taking a backseat once again, I think things should really roll back.
Right. And Deepak, I understand that you have to leave in a short while as well, and we will conclude soon. So tell us about how you're looking at the big numbers, the big capex number which you referred to in the at the open. And okay, maybe as Girish says that we don't no one's going to disturb anything because we've got all these disinvestments happening, and maybe even privatizations if we get lucky. And the government's got this huge big spending target which is put there. So and nothing should again disturb that. So is this likely to go to plan, and if not, or what should we be even worried about if so?
Well, you'd worry about weird things. If you want to worry, there are 100 things to worry about. But you'd worry about things like, oh, what if there's a war? We don't have money for a war. We don't have any, patience for a war. But what happens if that happens? It just
Right.
any level of belligerence changes things. So, but here's what I think. We don't know about, and that can be a positive surprise or a negative. It depends on how the system goes. I'll give you one example of this: the highways that we've built. We've empowered with FASTag. Now nearly about 80-90% of the vehicles that go on it have FASTag, automated collection, so there's no losses during at the toll booth as much as they used to be. So because of this, now NHAI, which has this massive portfolio of highways, can take some of these places and say, well, you know what, we can put them into these InvITs or the infrastructure trusts and sell them, because there are lots of people abroad who would love something with a 6%, 7% guaranteed yield, almost guaranteed. It's not guaranteed, but the rough amount of vehicles that travel per day and X how much. So this kind of a yield that you're able to sell these InvITs at is now 6.5%, 7% privately. That's fantastic, because the IRRs on some of these projects have been 16%. So you can imagine the differentiation that can happen in terms of revenue that comes in by just monetizing what is just a tolled highway. And like this, the idea is, it's like it took 4 years for FASTag to happen. And suddenly they made FASTag compulsory. And the lockdowns and all that broke things down, but then they've come back into action. Everything's back in. So when you've got that infrastructure, can you do the next step, which is to sell the tollable highways and so on? Like this, there are a bunch of other things that the infrastructure is building. They haven't done much of it in ports yet. They haven't done much of it on the sea. We have the largest coastline. We've done nothing about it for 8 years. And I'm really sorry, but I expected much more of this much earlier than this. But as much as it has to be said, I think we should look at beyond the government for pushing spending. And one of the things the government doesn't do is allow decent private investment into expenditure in the smaller way. I'll give you an example. You and I can't start a company together whose only job is to invest in other companies. That's because we have to register it as an NBFC because of some Companies Act law that says more than 75% of your assets are securities, then you have to be an NBFC. Why? Why can't 4 people get together and build a company that can collectively invest in something else? And that's exactly what startup investing is about, right? Otherwise, you have to go to each person and get permission and this and that and all that stuff, which is unproductive. I think a lot of times it's the friends and family that kind of get together that want to invest in a company. I think we don't allow that. We've added another layer on taxation this time. This is very strange. I'll give you this. So in this budget, before this budget, there was a law that said if you invested in a company, let's say you invested in my company, the taxman could ask me, where did Govind get his money from? And I have to ask you, and you have to get your tax returns and give it to him. Fine. But if you gave me a loan, that was okay. I didn't have to prove your source. They've changed that in this budget to say, if you give me a loan and you're not a bank or an NBFC or a venture capital fund or regulated entity, then I should get your tax returns and find out where you got that money as well. Now, this sounds like basically what are you doing to Indian business? I mean, you want to build businesses, you want to build a lot of small businesses, and then you're going to put all these rules because the tax man is like this guy who's been given a target. He said, yaar, kya karu? Isne loan liya, usko pucho. It's anti that.
This is a surprise, Deepak. No one has mentioned it till now, and now that you have, it's almost like the angel tax, right? Where if
it's now the shark tax.
Yeah.
I mean, you had the angel, now you're getting the sharks who give you loans. Now, uska bhi leke aa, income tax return. I mean, I don't know. I should call it the shark tax.
Yeah, yeah, and the copyright is hereby awarded to you. Uh, Girish, any view on this?
No, that's a change that has happened. Section 68 has made that provision happen. Again, as I told you, the intent is right. I mean, it's not for the black money to come into companies,
Hmm.
but just to penalize all, assuming that they all would be doing it, is ridiculous. So I agree with him that that's again what I meant. The intent is there, but it just consequences are very dramatic.
I mean, angel tax too was fine if it was used
Yeah,
as an
yeah,
exception, but it became the rule. Anyone
yeah,
who, or almost anyone who got money had to show that it was, from someone legitimate and go and get their income tax returns,
correct, correct,
exactly like it is in this case. Okay,
correct.
okay. So on the tax front, I think there are still some ways to go. As we head to a close in the next a few minutes, let me get a sum up from both of you. Deepak, do you want to go first? Overview, and then one or two things that you liked and one or two things you didn't like.
Sorry, yeah. I guess I think I've done my rounds of what I didn't like, which was, I mean, I didn't like there's a bunch of things over here which I think the government didn't do. They could have done this, income tax rule. It's a very contentious rule, but I think it's fair. Remember, our mutual funds don't pay any tax when they buy and sell on the Indian markets. But a mutual fund abroad has to pay Indian capital gains tax when it trades in India. Our mutual funds, when they invest in the US, don't have to pay any US taxes. But the US mutual funds, when they invest in India, had to pay Indian taxes. This is a little incongruent, and only few countries in the world, and very little, not very big countries, do this, and we are one of them. And we should have changed that. Another thing we should perhaps, I mean, there was this cause of saying the ATC limit has been stagnant for about 10 years. We don't have a retirement concept of a retirement investment asset. So everything is this little 1,50,000 limit, and you put everything inside it. The US has a 401k. I would have loved a concept of a retirement account. You don't need the budget to do this. You can do this outside the budget as well. Create the concept of a retirement account, which is a tax deferred. Anything you put in today is not taxed. When you take it out, it's taxed as income, not as capital gains, so that you can take it out only when you retire. What I think I like about the budget is capex friendly. It is also, they've reduced import duties, so they've rationalized a little bit, because import duties reduction makes our exports a little more competitive. Very contrary to earlier thought process. But if your import prices, duties are high, then you can't make some of the stuff that for exports, because it's not competitive. So also that they didn't change anything on the tax concepts too much, so didn't scare us with higher taxes.
Right. And investment themes from as you look ahead in coming weeks, months.
To be fair, I haven't changed my mind, except I think I like banks a little more now, because they didn't create any damaging impact on the banks, though not necessarily the public sector banks. I think I like the private sector corporate oriented banks more, because I think in this capex, they will be the one that's benefit. Other than that, I think it's a little bit negative for certain chemical companies. There's some chemicals like caprolactam. It's about 20% of certain companies. So the import duties there have been removed. Paper packaging, import duties have been reduced. So these are the areas where I think there may be some, realignment, but those are cyclicals. I still like my favorites of, say, IT and tech, and that's the Bangalore phenomenon, right? It just sits inside and doesn't go away. But otherwise, I think, choose your companies, right? Choose your themes the way you know them. And I think longer term, India is going to do really well. This budget's not going to change that.
Right. And public sector banks actually did not get any mention in the budget. Right. I mean, so
No
that's
disinvestment either.
yeah, no disinvestment either. But no money being given to support them, prop them up, and so on. So
It'll be given. It just won't be mentioned in the budget.
the budget. Okay. Okay. Anyway, so we'll stick to your original themes of banks and some of the companies that you, or the industries that you spoke of. Girish, your sum up and takeaways.
My takeaway is that I was very happy with it. No changes, not too much running around trying to interpret ridiculous things. There is a lot of cleaning up that is there, and the devil is in the details, as I spoke to you about for cess and surcharge and like Section 68 amendment, which Deepak spoke about. But overall, very, very good. But what I'm expecting is, I think there are a lot of policy initiatives which the government has to do, which is not covered in the budget, not supposed to be covered in the budget, whether it's a cross-border merger, SPAC, international fundraising, so on and so forth, which is very good for the ecosystem of raising money. And I think that reform process should continue in the next few days as we look.
Girish, just one quick thing. The minister referred to, winding up companies and using IT-based systems and so on. So that seems to be I don't know if you've studied that more carefully. It seems to be a
Within
good
6 months, they are saying that they will close companies up, so we don't need to go through big, lengthy processes.
thing.
So a lot of people who have many, many interlocked companies, holding companies, they can wind it up and clean up their structures. And that's a very good thing, but let's see how it's executed again. So comes back to execution.
Okay, and even I don't know if you would like to stick your neck out, but do you have any investment themes in general or specific?
Investment things, I think, as I see my clients, as I see people around me who invest, I think manufacturing is looking very, very good. It just seems that the capex cycle will revive, and manufacturing is looking very, very good across. So I think, and that's why if you look at the metals and all, they all went up, hoping that infra spends would happen and different kinds of investments would happen. That's looking very, very good. So
Okay,
for
so
once, Bangalore is looking different because Bangalore is a unicorn place. With SaaS, it's looking very different for Bangalore versus manufacturing. And I think the biggest miss, I'll just speak about one miss,
sure.
which I was anticipating for Bangalore and Delhi actually, was this ESOP taxation. That's a painful thing. That should have happened. That's not fair actually, Govind. That's not fair. Because the point of taxation should be deferred to the point of sale and not, in the interim. This is the real hardship which should have been taken care of. I hope somebody makes representation. So when the finance bill is passed, this is one change which we should push for.
Deepak, you want to chime in quickly on that because I saw you reacting.
No, I'm all for it. I mean, we're
Fine.
all options people. Yeah, we love the concept of deferring tax. I mean, I run a company. I give every time we give our people options, we look at the tax impact on vesting, and then we're like, oh my god, or exercise. So it's just unnecessary mind space. I mean, I keep fighting, and then I'm like, why? They're like, no, it's there. You can't question why. So then I'm like, okay, maybe if they made this change, if they're willing to make this change, I would, I don't know, I would personally give the budget 2 thumbs up again. So.
Okay, great. So that's an important note to end on, but in a sense, an important input into entrepreneurship and encouraging entrepreneurs to not just set up but also to distribute their the wealth creation opportunities. On that note, Deepak Shenoy and Girish Vanvari, thank you so much for making this evening come alive, as it were, and also setting the stage for coming months of good investing and wealth creation for everyone, I guess. Thank you so much.
Bye.
Thank
All
you.
the best.
Bye.
Bye.
All the best. Cheers.